Good morning, good afternoon, good evening, wherever we're dialing in from. A very, very warm welcome. If we've not met before, I am Katie, helping you navigate the Dubai property market. And today we are in for a treat. Guys, the Dubai market is thriving. Everyone wants a piece of what's going on here. It's my job to make sure you are buying right, to make sure we are maximizing that earning potential. We work hard for our money. We want to make sure our money is working hard for us. And yes, Dubai has a lot going on. There's an incredible amount of opportunity, but don't be fooled. Don't throw your money into the market assuming you're going to be a millionaire overnight. It doesn't happen. You need to be in the right projects, right developers, and it's my job to help you navigate it all, to make sure we are maximizing those returns and making sure we invest safely, securely. And that is what we're here to do. So starting first and talking about the Dubai market in general, I'm a data type of gal. Let's go through the numbers. Your returns on apartments last year were 23% increase on average across Dubai. Villas and townhouses on average across Dubai rose by 31%, okay? Now we can all agree 23% increase in an apartment, not so shabby. And I'd actually argue, where in the world right now can you make that happen? However, if you are coming to me and going, Katie, I want maximum capital appreciation, then the numbers don't lie. I'm naturally going to be leaning us towards the villa and townhouse community because they capital appreciate at a higher rate. So if that's your strategy, that is where I'd want to focus. When we look at the areas with the highest capital appreciation last year, you can see all the top areas were all villa communities, and it's no surprise. With the annual capital appreciation on some of those, frightening. Look at that, Jumeirah Islands, 42.5%. So villas are very, very strong when it comes to your investment because they're gonna offer you a higher capital appreciation. Not only that, but for my cash flow, guys, rents are actually growing at a higher rate too. And that genuinely comes down to supply and demand. The fundamentals of investing across any asset class always comes down to supply and demand. The villa community, the villa space, there is quite honestly just less of them. And there's a huge, huge demand. Only 20% of the current inventory in Dubai is villa and townhouses. Now, Dubai is getting a huge growing demand because their population is increasing every single year. Their growth rate is increasing every single year. For the first half of this year, we had 1,000 people move every single day. And with all the benefits that Dubai offers, the tax-free, the safety, the security, the incentives, the types of people that are moving over are wealthy professionals, business owners who bring their family, which means they need space, which means they need townhouses and villas. And quite honestly, the supply is not there for the amount of demand that needs it. And that is why capital appreciation has gone through the roof. Not only that, in a villa space, you're not just buying your block. You're buying into a master community, and master communities, again, typically capital appreciate at a higher rate because when you are buying a villa, you are part of a master community where golf courses, gyms, swimming pools, parks, everything is thought about. You've got one person creating and designing the roads, the architecture, the infrastructure. It has a feeling and a sense of oneness. It means you've not got construction going on left, right, and center. Everything is thought out and planned because there's one person owning the master community. Again, it helps our demand when it comes to rental returns and your demand when it comes to sell because typically master communities have a higher demand. Your tenant profile, a reason a lot of my clients like buying into the villa space is because your typical tenant profile that you're going to see here is typically families, and they tend to stay in their properties for a longer period of time. If you have a villa, typically it is going to be a family that's going to move in. Now, it's a lot more difficult for a family to move because you've got jobs to think about, schools to think about. So typically families will stay in a property for a longer period of time versus a single working professional. Naturally, you're going to have a longer tenancy, less void periods, which ultimately means higher returns. Also, it goes without saying, any investment at this level, you are going to qualify for the visa and all the benefits that come associated with it too. So then people go, well, Katie, why isn't everyone buying villas? Very good question. Firstly, because it's competitive. These launches sell out quickly, so getting access to inventory, some people find difficult. We can help you navigate that. Don't worry about it. Secondly, usually the barrier to entry is higher when we're looking at the finances because because villas come at a more premium level. So when this launch came about, I knew I had to tell you about it, because a lot of the conversations that I have when you talk through the numbers of villas, people are like, okay, well, what is the entry level point? What does that look like? And this is a fantastic option that is coming to the market, which gives you the opportunity to get into the villa space, to get all those benefits we talked about and associated with buying a villa, but at the lowest possible entry point. And this is one that's sat in Dubai South. For those that are unfamiliar, this is obviously a map of Dubai. Now, if you've visited here before, you'll be familiar with Palm Jumeirah. You've got downtown that's sat up here. You've got Dubai Marina. But more and more development is being pushed down into the south. And this is because of a few reasons. Firstly, the Al Maktoum brand new airport that was announced that is coming to this plot of land here. This is going to be the biggest airport in the world. Dubai don't do things by halves, okay? We're talking like 3 times the size of the current airport. It's to host 250 million passengers every single year, and there will be 1 million staff working in it alone. So the day and hour this was announced, a lot of attention then moved to this direction, because this means infrastructure. It means there's going to be a lot going on. We saw the launch of Palm Jebel Ali, which is the Palm but bigger and better, and that's sat here. So you can see a lot more investment and development is going down here. Now, this particular launch is sat in this plot of land here, right next to the airport. When we look at the fundamentals of investing in general, accessibility is a huge piece of that puzzle. Now, firstly, we know we're going to be well looked after in this plot of land. You are next to an airport, so flights, big tick. Next up, you are wrapped around 3 major arteries of Dubai, meaning accessibility by roads, again, super easy. What is fantastic about this opportunity as well is your public transport side of things. You are going to have a metro, which is going to connect you to the rest of Dubai. Not only that, the Etihad Rail, which is due to come in, which again is going to be the super fast train taking you to Abu Dhabi in 30 minutes. Accessibility to these hubs are very, very popular with tenants, with end buyers, helping us as investors in the long run. So this particular project is coming to the market by Dubai South developers. Now, these are a government-backed developer. They're a government entity, which is fantastic news for us buying into it for a few reasons. Firstly, financial stability. You know, when it's government-backed, security, the funds, they are going to be good. If we look around the world at projects that never make it to completion, 90% of the time, it's a financial issue. When you're government-backed, it mitigates that risk. It gives us a lot more security. Not only that, when you're buying with a government-backed developer, they are aligned with the master plan. They know what's happening before we know what's happening, hence why they get the premium plots of land. You can see the guys that are coming in here. You've got Hyatt by Dubai South, government-backed, Emaar South by Emaar, another government-backed developer. They knew when they were placing these plots of land that the biggest airport in the world was going to soon follow just next door. When they're government backed, they have these insights, but not only that, they also get infrastructure priority. Rest assured, if there's traffic issues, if there's problems, when we're talking about the metro coming in, these places where the government-backed developers' plots of land are always prioritized when it comes to resources and making it happen. So it gives us a lot of peace of mind when we are investing into a team like this. Now, the project itself, you can see what I mean when you are getting in as part of a master community. They don't just think about your plot of land and your villa, you're getting much more. You are part of a community. So all the gardens are looked after, all the roads are looked after, you've got access to all the facilities, the clubhouses, the sports, the gyms. They create a city within a city. The clubhouses, the restaurants, the cafes, parks. They truly think of everyone who's going to be living in here and how to make it a beautiful place for them to live. I will make sure to leave links below this video so that you can have a good look at these brochures and take a good nosy at what exactly this product's going to look like, because it really helps bring it to life, exactly what you can see here. Katie, all sounds good, but you told me this was entry level. What does this look like? That's a very good question. Let me run through the data, the numbers on an actual payment plan on this next live launch. Now, every launch can be different, I'll preface that. However, we have live data of the next upcoming launch, so I'm gonna roll through what that looks like in terms of your entry level point. Now, your 3-bedroom townhouses, your entry level point starting at 3.6 million, AED. For my Great British guys, that's about 750 Great British pounds to purchase a 3-bed townhouse entry level point. The great thing about this, and something you don't typically see with a government-backed developer, is a flexible payment plan. Typically when it's government backed, because there's such a high demand, they're like, listen, pay cash, pay up front, you know how it is. These are going to sell out either way, and they're not really incentivizing you to do so. However, here, they've come to the market with a really competitive payment plan, which again helps us as investors. So on booking, you need 10% down of that property price to secure your unit. Alongside that, you're going to need your DLD. DLD is your equivalent of your stamp duty. It's a flat fee across anything you buy in Dubai. There's also a small admin fee you'll see in there too. Then you are popped into a payment plan, and it's essentially 5% every quarter so that you can really cash flow exactly what this is going to look like over that build period. And when it comes to handover and completion, these final payments, these are mortgageable. And you have two options here. You can either 3 months before it comes to handover, get a mortgage product in place to pay for this final amount, pay off the property's yours. Or the developers here are actually going, listen, if you don't want a payment plan, that's absolutely fine. We'll keep you on an interest-free payment plan, pay us 25% now, 5% in 6 months' time, and another 5% in 12 months. You can own the whole property outright. So it gives you, again, a little bit more flexibility when it comes to your exit options, how you would like this to look. However, if you would like to mortgage the product, and assuming you are mortgaging the product, all in across the 3-year build period, you're putting in 522,000 Great British pounds. So that's what we're putting in. What are we getting out is the more important question. Let's dive in. One side of your investment is your rental income, okay? Now, Dubai South is a longer term play. The reason I say that is an airport's not created overnight, okay? So when we are looking at live data here, it's difficult for me to actually guarantee what this is going to look like. The only thing I can do is look at the live data of what we've got right now. But I'll warn you now, this is conservative. So right now, for a 3-bedroom townhouse, I'm seeing live rents sitting at around 200 AED annually, which is about 42,000 Great British. Then you need to take out your service charge, because all those facilities we talked about, the parks, the grass, the community, the housekeeping of it all, your security, the gated access, all that good stuff, it comes at a cost. Take that service charge out of there, then we can look at your net returns. You're looking at £40,000 in your pocket annually. That is based on today's rates. In reality, rents in Dubai typically increase by 10% a year. Here, I would argue we're going to see even more. There's going to be 1 million staff working in the airport alone. All these staff, flight attendants, need somewhere to live. The Emirates staff, they get a housing allowance, okay? You can see the types of people that are going to be living in there. If we are looking at 200,000 today when the airport's not built, imagine where this is going to get to. And you can play around with this spreadsheet to understand what that's going to do in terms of your yields. However, I'd always prefer to underpromise, overdeliver. If you're happy with worst case scenario, if things just stayed as they are, and anything else is a nice win. Okay, so your cash flow, you're going to be very, very well looked after, but I know some people are looking to get in for a flip, or they might want to sell the property. You want to make sure you're looked after on that side of things too. So that's why your capital appreciation comes in. Now, we're assuming your price is 3.6 million AED, about 750 Great British. In here, again, call me Miss Conservative, I've put 60% as your typical value increase. And I'll tell you why that's conservative. Because last year alone, the capital appreciation here was 27.7%. So I'm assuming 20% a year to be conservative, 60% increase. So by handover, we're looking at 1.2 million. Cash in based on the payment plan, 490,000, and your cash out, 718. 46% increase on your capital. And I know this is conservative, but I'd always prefer to underpromise, overdeliver. In reality, let me just show you some live examples. The 2 most recent sales in this area that I could find that I pulled from the DLD. So this was a 4-bedroom townhouse. Investors bought this off plan in 2022 for 2.1 million. They sold it literally a couple of days ago for 3.4 million AED. When we're looking at the Great British there, that's Original purchase price of 450,000 Great British, and they sold it for 720,000 3 years later. That's a 60% increase in 3 years. Now this is where the good stuff happens. When we're looking at a 50-50 payment plan, that means they only put in 225,000 and they got out of it 496,000. So the return on your cash invested was 120% in just 3 years. Again, the next example, this is a 4-bedroom townhouse. They originally bought this off plan in September 2022 for 400k British, sold it again a couple of weeks ago for 685,000, an increase in value of 71% in that 3-year construction period. Guys, the airport isn't even complete yet. On a 50-50 payment plan, that's the guts of 200,000 in, and you're getting out 485,000. That is again 143% return on the cash invested in 3 years. The next example, original purchase price, a 3-bed townhouse bought for 300k British, sold for 579k. That's an 84% increase in 3 years. 50-50 payment plan. In, you're putting 157,000, out you're getting 422,000. Return on cash invested is 168% in 3 years. As the airport isn't even complete yet. The capital appreciation is still yet to come. This is what's currently happening in the market. With everything else that's set to come, you have the brand new airport. You have Expo City, which is coming in, which is the events capital of Asia, which is connected next door to the airport. Some of the biggest businesses in the world moving their headquarters there. DP World's already in, Siemens have already relocated their head office there. The opportunity in this area is quite honestly phenomenal. You can see you've got the airport, you're going to have Expo City, you've got all the biggest businesses moving their headquarters here, you've got Jebel Ali Free Zone. Again, it's going to attract an incredible amount of investors. We've seen the performance to date, and they're not even near to this happening. I see so many different projects every single week. The reason I've highlighted this one for you is because it's a chance to get in early to an area. The cheapest time to buy is when it's sand. That's where you're going to be looked after. Early investors are always rewarded. The payment plans, again, phenomenal. It helps with that ROI, especially if you're looking for a flip play. It can really help you on that front. Accessibility, one of the fundamentals to investing. You're going to have trains, planes, automobiles, literally it all wrapped up in the security of being with a government-backed developer. Now, these launches, they sell out, which is a blessing and a curse. When they sell out, no one can then go to the developer and buy from them directly. It means the investors can start to set the market price, protecting your capital appreciation from day one. Not only that, but with each launch the developer releases, goes up in value and price point, again to protect those early investors. So as I said, the process around this one, it's competitive. When you see those numbers, you can understand why. There's a lot of people that want access to these properties. The way it typically goes, especially with this developer, is we need to get you registered. We need to get you on that list. Now, think Wimbledon. Yes, that is right. I know it sounds wild, especially if you're not used to this market, but because it's so competitive, it's almost a raffle ticket system for your chance to buy one of these things, okay? So we get you registered, we get your raffle ticket, then it rolls around to allocation day. That is the day where that is a very, very exciting day. At this day, this is where we're getting your allocations. This is where we can see price points, exact locations on the map of your unit. We can see what the payment plan is going to look like, your floor plans, all that good stuff. Now, if you're happy with the unit, fantastic. We move into reservation. We make that 10% down payment. The property is yours. You're popped into the payment plan. You can set it and forget it and see you and watch your capital grow over the next 3 years. If for whatever reason on that allocation day you're not happy with the property that you've been given, no problem. You can walk away. We can help you. We can help you get into the next right project for you. And there's no stress, nothing lost. The reason I tell you this is because the launch process are competitive, and if you want a chance to get in, we need to have that conversation as early as possible so I can help you navigate it all. If you do want any support on this, any more details about the brochures, floor plans, even if it's just a conversation about the Dubai property market in general, that is what I'm here to do. Use the links around this video. We can have a chat, understand where you are now, where you want to be, and I'll put the right product in place to help you make that happen. I really, really hope you found that helpful. Any questions you have, leave them in the comments below. I'm always around, and if these videos are helpful, I can continue doing more of them. For any additional support, use the link, book in a call, we can have a chat. Hope you found that helpful, and I'll see you on the next one.